Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back to another episode of Bishop's Move on WSI TV. I'm Jordan Bishop and I'm joined by Leah Warren. How you doing, Leah?
I'm doing great. How are you?
Good, thanks. So let's jump into the topic of the day. We're talking about the death of retail. One important thing about this headline is the question mark on the end. We're not professing the death of retail here as we get into it, as you'll see. But first and foremost, make sure you go over to WSITV.com, get access to our free daily newsletters, and sign up for that WSI Vault. So Leah, why don't you kick it off here with what we're talking about?
Yeah, so the reason why there's that question mark on the end is because we're not talking about the death of retail as a fact. We're just reacting to the headlines that we've been seeing. There's been things like this is the death of retail, and then my favorite was the retail apocalypse is here. So all of these very doomsday reports on the state of the retail market.
Right.
And this is because quarter three earnings are coming back in. As we actually finish up quarter four. It's always how it works. We're one quarter behind when we're getting those earnings. And the results have sent the media into a panic because the results are a little bit low compared to what the estimates were. The retail sector's performed worse than expected across the board, and analysts are looking for explanations as to why. So we're just going to dig into that and talk about the reality behind the headlines.
Yeah, absolutely. And I just want to just note really quick, the retail apocalypse sounds so drastic.
I know.
I mean, you really see, it sounds like these stores are on fire right now if you walk outside. So let's jump into that then. As you brought to my attention, the lion's share of this blame is, of course, technology, because they need somebody to blame, right?
Yes, absolutely. So everybody, all the analysts, all the experts have been saying that the reason why the retail sector is failing is because no one is going to brick and mortar stores anymore. Everybody's saying that you're going to websites, and they're blaming big websites like Amazon for ruining the retail sector. But this is already oversimplifying things because the retail sector isn't just brick and mortar stores. The retail sector is anything that we're buying goods from. So that includes websites. And even if that weren't the case, this isn't the whole truth, and this is just people pointing fingers. So we're going to dig into some of the reality of, is the retail sector really taking a hit or not?
Right, yeah, and it's very interesting because, and we'll get to these facts in just a second, but you talk about Amazon ruining things. If you look at Amazon and what they're doing, they're actually opening up brick and mortar stores.
Yeah.
You know, they're just using extra technology to innovate. And really, in any industry across any time period, innovation is key to growth here. So, but yeah, let's jump into some of these facts.
Yeah, absolutely. So we're looking at the quarter three returns, and even before quarter three began, companies like Best Buy, Kohl's, Home Depot, and a couple other big names were calling out overly big earnings reports, and they were saying that they were going to have these big quarter three earnings, even though quarter three is usually a smaller earnings season for the retail market especially.
Right.
And so they overestimated on all of these projections, and then when they came back, they were a little bit under. But only a little bit.
Yeah,
so.
I mean, the problem is there, Q3, it's obviously before Q4 because that's how numbers work, right? So it's coming into Q4, which has Black Friday, and it also has Christmas. So it's going to look weak, and I don't know why they overestimate it each and every year. It happens all the time. But people don't really want to spend in what is that, July, August, September, you know? It's generally slow. You know, it's generally slow. You go outside, I mean, the kids are off school in July and August. I mean, it's just slow all around.
Yeah.
So I don't know why they would estimate so high and kind of shoot themselves in the foot there.
Yeah.
But it's very strange.
Yeah, so it is strange. And honestly, August is historically the biggest drought in retail sales every year.
Yeah.
And so you would expect them to compensate for that, but they haven't.
Yeah, and you see it in the stock market. I mean, July and August, it's just, it's almost boring, you know, because nothing's really happening, not much is happening. So it reflects in the market as well.
Yeah, absolutely. But despite that, everybody had these big earnings estimates, and then the reports came in and everybody lost. And so the headlines are all reacting to this. So we've seen things like that retail apocalypse headline all over the place. Another headline that caught my attention was Kohl's shares tank on earnings miss. And that was from CNBC, and a couple other websites were saying the same thing. But I went and I researched the numbers. Kohl's brought in $4.36 billion, which was only 0.04 shy of the 4.4 billion projected. Now that is still a big number miss, but that's just a drop in the bucket when you look at the overall earnings of Kohl's, and they still brought in $4.36 billion in a single quarter.
Right.
So
I mean, CNBC isn't wrong, but the fact that they've chosen this, I mean, they probably tried to look at the biggest miss as well, so this is probably on the heavier side. But the shares dropped, I mean, minimally, right?
So Kohl's stock has actually risen 17% since August.
Okay.
That is taking in some of the quarter four earnings, but the dip was only about 4%. And it rose really soon after that, even before the quarter four earnings started coming in.
Right.
So that shares tank is a huge over-exaggeration.
Yeah, I mean, that's crazy. I mean, maybe that's considered tanking if you make 6% a year with the market. Then you've lost 2/3 of your profits. But I mean, really, you could have just got in and made a 17% gain. Rode out that percentage, and I mean, 4% wouldn't even break our stop losses.
Exactly.
But,
and that's all about knowing the system. So if you don't know what you're doing in the stock market, that may have been a big tank.
Yeah, or if you're just a normal person reading the news, because I mean, that's what CNBC is doing here, which I mean, isn't right, but they've got to sell ads. So.
Yeah, but that's just one example of many of the headlines that we've seen, and it's just kind of disproving it a little bit, because Kohl's is doing just fine. So
exactly, yeah, and there's some other losers, in quotes here. Why don't you talk a little bit about Sears, and we'll go through each one.
Yeah, so with Sears, this was thrown in as one of the examples of the retail losses for the third quarter, but the big thing to note here is Sears has been on a downtrend for several years, so it's not the quarter three bust. It's Sears is a company that has other internal issues and is slowly dissipating because other things have risen to take its place. So Sears has just been thrown in there as kind of this red herring to prove a point that isn't really there.
Yeah, I mean, if you group any company with Sears, it's going to sound bad, right?
Yes.
If you say this company is going like Sears, I mean, it doesn't look good. But then there's Nike.
Yeah, so with Nike, the example was that it's moving away from third-party middlemen and putting more funding directly into their stores and their online presence and production. So this was seen as a sign of weakness because it's a change in their internal structure. But I think this is them rising to the changes and, like you said, adapting. And this isn't a weakness. And if we look like we're going to at the Nike chart a little bit later, it's a very strong chart.
Yeah, I mean, really, all I see there is they're cutting the fat. They're cutting out the fat in the middle. It'll probably mean bigger profits. It'll mean more money to spend on innovating their brand. So that's and Nike, I think, is I mean, they're one of two major. I mean, there's a lot of big sportswear brands.
Yeah, but those are the two big ones.
And Adidas. I mean, you've got Under Armour coming up as well. But Nike's at the forefront of that industry, and I mean, I don't see them going anywhere.
No, and especially because a lot of this cutting away from middlemen is moving production back to the States with several of their companies. So they're going to be bringing a lot of work back here and becoming a much more American company.
Great,
so that's
for the
a really
economy.
cool thing. Yeah. And then with Macys, they're reported to have lost 6% in the market, but that's only looking at the third quarter. And when you look at the big picture, Macys has actually reported very high earnings this year and has seen a boost in stock after several years of decline. So this is one that we've actually been looking at for some time, I think.
Yeah, Macys is a decent one. We put it out on one of the services. I want to say maybe Midas Premium. I can't remember exactly. It was earlier this year, but it was something we had our eye on, and it's still looking fairly strong. So, if you group Nike and Macys with Sears, it's going to sound bad.
Yeah. So what does all this mean? No one can deny that technology is changing the way that we shop. A large percentage of online shopping takes place, especially in quarter four, and we've seen reports on that from Black Friday and from just the general Christmas season. Unless people are going to physical stores and more people are going digital, but this doesn't mean that the brick and mortar store is going out of style. Like Jordan said, we're still seeing people go into stores, and especially with the Amazon innovation of a new version of the brick and mortar store.
Right. I mean, people's habits are never going to change, until they change Christmas Day and Black Friday, which, I mean, I don't see. I think that's a safe bet that that's not going to happen. It's always going to be in Q4. Q3 is always going to be lackluster. People want to save, they think about their family and all the gifts they're going to buy. It's just how it is. But there seems to be this new story every year. Technology is the culprit this time, apparently. But of course, as always, it's never as scary as the headline.
Yeah, absolutely not. So the real impact of retail is huge, and only 9% of retail purchases are made online. So this number actually really surprised me. I expected it to be more near 20-25%. But we're only at 9%. A lot of people shop online, but not a lot of people buy online. So people will peruse stuff and figure out what they want and then go into the store and pick it up. Or will go into the store and just shop once they know that it's there.
So how do they count that if they buy online and pick up in the store? Where does that fall?
I think that still counts as an online purchase, but they'll check to make sure it's in store and then go into store and buy it. But people will just kind of peruse. I know that some people, when they need retail therapy, instead of actually buying online, they'll just fill up their cart online and then not actually check out.
Right.
So lots of stuff like that is happening, but people aren't actually moving away from going into stores. There's nothing that can beat actually going into a store and seeing what you're buying in person.
Right. One thing too, behind the scenes of Amazon as well, people just see Amazon as this behemoth. They have a lot of other services that make up a lot of their revenue. You know, they have their cloud services. They're not just an online retail store. I mean, they started out as an online bookstore, but you know, just because they're this big, it doesn't mean that that's the way consumerism is going. That's the way shopping is going. You know, I mean, and again, they're opening up brick and mortar stores, so that just shows that they're reading the market, and they're probably looking at these numbers as well and thinking people are going into stores. Let's follow suit.
Yeah, so that's 91% of purchases are made in stores. So.
Yeah.
And the number of online purchases is expected to increase, but only to 12% this year. Or I guess it's still next year, but almost this year. I'm ready for 2020. That still leaves 88% of retail shopping in stores for the brick and mortar setup. And then overall retail spending has actually been increasing by an average about 4% since 2015. And that's an average trend that's been continuous since the 90s, actually. The only hiccup was in the 2008 recession.
Right, yeah. I mean, that's really, you know, when people stop spending, that's when the economy really slows down. So as it's growing, as consumer spending is growing, the economy keeps growing and speeding up. So
yeah,
interesting. Those are the facts, not the headlines.
Yeah, so these are the facts. People are spending more,
Yeah.
and retail is still going. 68% of the economy is made up of consumer spending. And that's a 2% increase in the third quarter alone. Third quarter, which is the slowdown quarter.
Yeah, the retail apocalypse quarter, actually.
Yeah, so there's been a 2% increase in spending in the apocalypse.
Yeah.
So those numbers don't seem to match with the headlines. And then $3.63 trillion has been spent in retail sales in 2018. And that number will probably have an even bigger number for 2019 coming out soon.
Yeah, I mean, especially with all this growth we're looking at, you know.
Yeah, yeah. So basically, the retail apocalypse is a false alarm.
Right,
it's not happening.
Yeah. Stocks have canceled the retail apocalypse, right? From an earlier headline.
Yeah, so as usual, the stocks prevail. We're going to look at some of those stocks right now. So we've got Target is one of our really strong retail stocks. I've been watching this one for a while. It beat its earning expectations, so it was the one standout in quarter three that beat its expectations. And then it's made a 101% gain since 2017.
Yeah, I mean, that's really not bad, you know. I mean, you know, we can joke about it, but really you just look at the chart. I mean, if a stock like Target, a big company, has doubled in the last couple of years, I mean, it's obviously strong.
Yeah.
I mean, it's that plain and simple, you know. And then you've also brought Lululemon. So what are you thinking about this?
Yeah, so this one was really intriguing to me. One, because it's just a beautiful chart. It's just that really smooth line upwards, and it has been for a long time. It's 230% increase since 2017. But also because this is a newer company. And this is like Amazon. It's been catering to the changes in the market and what people want. Lululemon, if you're not familiar with it, is specifically for athleisure wear, which is a fairly new industry, but now it's a multi-billion-dollar industry in fashion. So
yeah, and I mean that chart again, as you said, it just keeps going up. So
yeah,
there's nothing wrong with that, you know. Strong chart, triple your money in 2-3 years.
Yeah,
I'm happy with that.
absolutely.
You know? So. And then we've also got Nike. We were just talking about Nike, right? And lo and behold, look at the chart.
Yep.
I mean, this doesn't look like a loser to me.
No, this one got a 96% gain in the last 3 years. So that's, again, really strong. It's a really steady chart. And this was one of our losers, according to the headlines.
Yeah.
But when you look at the chart, there's no losing happening.
Yeah, and the chart is literally just a representation of the price of the stock, which, you know, obviously it shows how strong the company is.
Yeah.
So I mean, I don't know what these headline writers are looking at, but
Yeah, I think they're just looking at those earning reports, but even those have a couple standouts. Like Target beat their earnings report, and then they didn't even count Amazon, even though Amazon is a retail sales company.
Exactly.
They have their hands in lots of other things too, but a huge part of why spending has increased for the retail market is because of Amazon, because we're counting those numbers of all those online purchases.
Yeah, so it's like retail technology is pushing the retail sector anyway. So I mean, but they're separating them misleadingly,
Yeah, and I think this is just that transitional period where we're figuring out that technology is not the death of; it's just the changing of retail.
Exactly. Yeah. Very very strange, very interesting, but the facts are in the chart. So I mean, if you want to wrap this all up, Leah.
Yeah, absolutely. So basically, everything that you're hearing in the headlines, you may have read some of these headlines yourself. I know that I saw several. That's what brought me to this episode, was just headline after headline saying that retail was in trouble. The truth is in the numbers, and the numbers are strong. Retail's going strong, and your profits are going to go strong if you follow through with it too.
Right.
So.
And the point is too, let's say the retail sector does fall, then we'll just look at another sector.
Exactly.
But that's not to discount retail right now. So thank you so much for bringing this to my attention.
Absolutely.
Leah. We'll speak to you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.